Have you ever wondered how some people seem to make thousands of dollars in just a single day of trading? What's their secret, and how do they manage the fast-paced world of stock market fluctuations? In this video, we'll uncover the secrets behind day trading, how it works, the strategies you need to master, and whether it's a profitable venture or just a high-risk gamble. Stay tuned to find out if you have what it takes to succeed in this thrilling arena of investment. Welcome back. You're watching your weekly dose of finance. We'll cover the basics and key strategies and help you decide if it's right for you. Let's dive in and turn your trading dreams into reality. What is day trading? Day trading is a short-term investment strategy where traders buy and sell securities within the same trading day. Unlike long-term investing where you hold positions for months or years, day traders aim to profit from the rapid fluctuations in asset prices over the course of a single day. The goal is to exit all trades by the end of the day, holding no securities overnight. This approach contrasts sharply with long-term investing, which relies on time and compound interest to build wealth. Day trading may seem glamorous, but it's high-stakes gambling with big risks. It requires discipline, risk tolerance, and a strong grasp of market trends. Let's explore what you need to get started and strategies to succeed. How to start day trading. Commission-free online brokers like Interactive Brokers and TradeStation have revolutionized day trading. You can now trade quickly from home with no commissions on stocks and ETFs and access free market data. To start day trading, you need to set up a brokerage account that provides access to various research tools such as charts, market news, scanners, and stock screeners. These tools are essential for identifying potential trades and making informed decisions. With your brokerage account, focus on choosing markets and assets. Day traders buy and sell throughout the day, timing trades to profit from short-term price movements, like buying before an announcement and selling at the peak. Top online brokers let you automate trades with order types, setting buy and sell limits. For instance, you can set an order to buy 100 shares at $20 and sell them at $25. 6 common day trading strategies. Trade the news. Day traders closely monitor news events to profit from market volatility. Major news events such as economic reports or Federal Reserve announcements can cause significant price movements. Traders attempt to predict how these events will impact asset prices or identify assets that haven't yet fully adjusted to the news. Range trading. This strategy involves identifying assets that trade within a specific price range. Traders buy when prices are near the low end of the range and sell when they approach the high end. Range trading requires precise timing, as sudden news or events can disrupt the price range, leading to potential losses. Scalping. Scalping is a rapid-fire trading strategy where traders make numerous trades throughout the day to profit from small price changes. Scalpers buy and sell hundreds of times daily, aiming to capture tiny movements in asset prices. They rely heavily on short-term price charts to identify trends. Momentum trading. Momentum traders capitalize on prevailing market trends. They buy assets that are trending upwards and sell those that are declining. This strategy is based on the principle that assets experiencing strong trends are likely to continue moving in the same direction. Traders use technical indicators and chart patterns to identify entry and exit points. Fading. Fading involves taking a contrarian approach by buying assets that have been heavily sold or selling those that have risen significantly. Traders using this strategy believe that markets often overreact to news or events, causing prices to revert to their mean. However, this strategy carries high risk as it goes against current market trends. Leverage. Many day traders use leverage, which involves borrowing money to increase their trading position. While leverage can amplify profits, it also increases the potential for significant losses. Brokers charge interest on margin loans, adding another layer of cost to this strategy. Advantages of day trading. Potential for quick profits. Day trading offers the opportunity for rapid gains. If all your trades are successful, which is rare, you can achieve significant profits much faster than with traditional investing. Easy access. Modern brokerage platforms make day trading more accessible than ever. You can trade from your computer or smartphone, eliminating the need for a stockbroker and reducing trading costs. Excitement. The fast-paced nature of day trading can be thrilling. The constant action and the challenge of making quick decisions add a level of excitement that long-term investing lacks. No overnight risk. Since day traders close all positions by the end of the trading day, they avoid risks associated with holding investments overnight. This means they're not exposed to potential losses from after-hours news or events. Work for yourself. Professional day traders can turn this activity into a full-time career. If you're passionate about day trading and can make it work for you, it could become your primary source of income. Downsides of day trading: high probability of losses. Day trading is a high-risk strategy with a significant chance of losses. Studies show that a large percentage of day traders lose money, especially when trading frequently. Fees and taxes. Even though trading costs have decreased, high trading volumes can still incur fees. Additionally, day traders face higher tax rates on short-term capital gains compared to long-term gains. High stress. The volatility and rapid pace of day trading can be extremely stressful. The constant ups and downs can take a toll on your mental health and personal relationships. Time-consuming and challenging. Day trading demands a significant time investment. You need to spend hours researching and tracking trades, competing against professional investors, and continuously refining your strategies. Requires deep pockets. Financial regulations require a minimum balance of $25,000 in your brokerage account to day trade. You may need more capital to handle losses and fund your trades effectively. Day trading is not for everyone. The reality is that the majority of day traders lose money. While a few may achieve steady profits, these are typically individuals with extensive experience in the financial industry, or those who are fully dedicated to mastering day trading. If you're looking for a way to get rich quickly, day trading might not be the right path for you. There are alternative, less risky ways to invest and grow your wealth. For instance, maxing out your retirement accounts and investing in broad-based index funds can provide steady growth with lower risk. What does it take to day trade? If you're still interested in day trading, here's what you need: a brokerage platform with research tools. Choose a platform that offers comprehensive research tools and is suited for day trading. Research the best online brokers for day traders to find one that meets your needs. Investment capital. Ensure you have at least $25,000 in your brokerage account to start day trading. More capital may be necessary depending on your trading volume. Skills and knowledge. Understanding the mechanics of day trading is crucial. Consider taking courses or classes to learn about different strategies and market dynamics. Market news and research. Stay informed about market trends and news. Utilize platforms that offer market research, newsletters, and forums to enhance your trading strategies. Plenty of time. Day trading requires you to be active during market hours. Ensure you have the time to dedicate to this activity and consider how it fits with your current schedule. Right mindset. Be prepared for the emotional and financial challenges of day trading. A strong mindset and a willingness to accept short-term losses are essential for success. Day trading offers excitement and potential profits, but comes with risks. Assess your capital, skills, and mindset before starting. If it's not for you, explore other investment options. Success requires knowledge, patience, and adaptability. Thanks for watching. Like and subscribe.